What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, we are going to be going over a lot, okay? This video might be longer than the usual videos. We have about 18 slides to cover, okay? And we're going to be mainly talking about the master pattern and how to apply it, but we're also going to go over a couple of other things, man. So I would appreciate it if you stayed for the duration of this video. All right. I'm just going to be totally transparent with you, okay? The watch time on these videos is important. You know, if you can like this video, comment, subscribe, all of that does wonders for this channel. You know, it pushes this video out to more people, but the watch time here is what I'm focused on, okay? I need to get a certain amount of hours viewed so I can start getting paid by YouTube, okay? So the more watch time there is, the better it is for the channel. All right. So I'd appreciate y'all's cooperation here. Now let's get right into this. Okay. We're going to be talking about how we use the master pattern, how we identify the master pattern on our charts. Okay. So we can look for the master pattern in conjunction with our 3-day setups. All right. This means that we look for our peak formations, right? We could get a peak formation on day 1, a peak formation on day 2, and then a lower low or higher high on the inside. That's what we're looking for, right? So here you can see that day 1 breaks the daily low and locks in this peak formation low and starts the pump, right? Day 2 breaks day 1's high, all right, confirming day 1 as the false break at the low of the week, okay? And then it puts in a peak formation high up here. This is step 1 and step 2 of the master pattern template. And all we need now is a lower low on the inside to confirm that we are on the back side of the template. Now, something that is very important here when you're trying to understand how to apply the master pattern, okay? You have to understand what we're doing, all right? The master pattern, I've explained this before in a previous video covering the same subject, right? But the master pattern is not telling you when to enter the market or how to enter the market, right? It's not about your entries. It's about the structure of the market, the direction of the market, right? If you can identify where you're at inside of this template, that's going to help you decide your direction. And that will also tell you if you're looking for a dump and pump or pump and dump. So the master pattern, if you can understand what we're doing with the master pattern, it's like putting on a pair of magical glasses, all right? It's a new way of seeing the market structure. It's not about your entries. We'll talk a little bit about entries and stuff like that also in this video, but you need to understand that the master pattern template is about the structure of the market, how to view market structure. All right. So with that being said, all right, how do we identify the lower low on the inside? Well, we know that while we're in an uptrend, the lows should hold, right? And the highs should be broken as we continue to put in higher highs. So once we start breaking those lows, that's the lower low on the inside. So let's try to identify when we start breaking those lows from the uptrend or the pump, okay? So, right, here's our peak formation low, and we're pumping up, okay? So you can see we have this low that's kind of put in place right here, this low that's put in place, and those lows hold. We don't come down and take out those lows, right? Then we come up here, we put in that peak formation, we get another low right here. And then all of a sudden, we break that low and put in a lower low on the inside, okay? So in an uptrend, these lows should not be broken, right? But then all of a sudden, we break it, all right? You get what I'm saying? So that's how you're identifying that lower low on the inside. All it is that simple break in structure, all right? The main structure that we've been seeing, okay, is higher high, higher low, higher high, higher low, higher high, higher low, and then all of a sudden, a lower high, a lower low, okay? And that is your first alert, okay? That we are now on the back side of this template, perhaps, right? And just as a reminder, okay, in a pump and dump template, on the front side, we're having higher highs put in place, which is the recipe for the dump and pump. So if you're trading on the front side while we're making higher highs, you're looking for this market to dump down into that EMA before pumping up. And on the backside, where we're putting in lower lows, we're looking for the market to pump up into that EMA and then dump. Okay. Now we're on a 15-minute chart right here. While we go through these slides, I really want you to pay attention to how the market is interacting with this 20 period moving average. All right. Especially on a 15-minute chart. If you're confused, go to a 15-minute chart. You know, if you're looking at a 1 minute or a 5 minute, go to a 15-minute chart and look at this EMA. It is sometimes scarily accurate. Okay. You can see how this market is dumping down into that EMA and then continuing, right? And then once we shift, you can see this perfect little pump up into that EMA, okay? But once this lower low on the inside is put in, now we know we're looking for a pump and dump situation in whatever session we're trading, okay? Now we're going to be using timings, levels, and behavior of price to help us identify valid peak formations and micro templates, okay? It's very important because when you're looking at your charts, you're going to see peak formations all over the place. You're going to see the template. You're going to see pump and dumps and dump and pumps all over the place because that's just how the market moves. But the ones that we are concerned with are going to be taking place in the session. All right. So if you pay attention, this peak formation is in the New York session. This peak formation is in the New York session. This lower low is going into the New York session, okay, for the pump and dump sort of continuation down here. All right. Now here we're looking at a 1 minute chart and we can see a few different highs and lows and M's and W's, etc., right? We have to remember timings, levels, behavior, and price. So we might see this low and then see this high and try to get in the market here, but we're getting in the market early before 8 o'clock. So even though you think maybe you're seeing something happen, chill, all right? Wait for the session timing windows, all right? Wait for those to be in effect, all right? And also look at the timing rotations, all right, for your trades. So you can see what I'm trying to point out here to you, right, is that sure, we have multiple equal highs up here, but right here, 9 o'clock to 9:15, we're pumping back up into these highs. Here's our micro M pattern, and we start to break down. We break through this low, okay? And then this vertical red line right here is 9:30, the 9:30 open. And we have come down, we've broken through these levels right here, pumping back up into the EMA, retesting that area we just broke out of, right? If we put it in a different language, we have resistance up here, we have support down here. So now we've broken this support level and we are retesting that support level. That support is now turning into resistance as we continue lower, okay? And this is happening right at that 9:30 timing window, okay? And then here this is a different chart, right? It looks similar, but this is a different chart. So on this chart, we can see that in the London, New York gap time, we've broken out of the previous day's low. That's our signal on the day, all right? We break that level, we might be expecting this market to continue going lower, all right? So we put in this peak formation low and start to pump up, and now we're consolidating sideways going into the timing window, all right? And here's a better look at it. Here's from 10 a.m. to 11 a.m. We're using the timing rotations and all of that good stuff, okay? And you can see we have sort of a micro master pattern right here on this 1 minute chart. We have this large pattern happening, this large template, and then this micro template right here where we put in this low, pump up, you know, and you can see this little micro head and shoulders reversal pattern here before we start to break down. And right here at 11 a.m., boom, you see that's a big green candle. That tail right there, that breaks through all of these levels, pumps back up into that EMA, rolls over and continues to trade lower. Okay, now here again, we have a peak formation high. This is a dump and pump template. Okay, peak formation high, day one, peak formation low, day two, and then a higher high on the inside. All right, you can see we had these levels. Again, we're in a downtrend, so we're putting in lower lows, lower highs, lower lows, lower highs, and those highs remain intact on the way down until here we pump up, we break that level. Now all of a sudden we have our higher high on the inside. That's alerting us now that to the fact that we may be going from front side to back side in this dump and pump template. And now, while we're making higher highs, we're going to be looking for dump and pump scenarios, right? You can see we dump, pump, right? On the way up. And here, this vertical line is that 9:30 timing window. Okay, get off my screen, right? And we are dumping down. Once again, you can see, right? We've broken out of the previous day's low, and then we trade back above that, okay? And then we're retesting that level. Again, the whole, support and resistance sort of flipping, okay? This was resistance, okay? And then all of a sudden we trade back above that. That resistance is turning to support as we continue to trade higher, all right? We always want to identify that initial peak formation that starts the dump because that's going to be our target on the way up. So we'd be getting in the market here and targeting that level. Now notice again the time of these peak formations, okay? They are occurring in a session window. We have our peak formation high in New York, a peak formation low in London. This is going to show you where your valid peak formations are. We're looking for those to take place in the session windows. Sometimes we will see those in the gap time, but about 80% of the time per Stacy, okay, we're going to see those in the session windows. Okay, and this, you see, these are different charts. It looks kind of the same, right? But we're looking at gold here. You can see we got that peak formation high, peak formation low, and then going into the session, we get our higher high on the inside because we've broken these levels here, okay? Again, we're dumping down. These highs remain intact. You see, not a single high on the way down is broken, right? Until here, we break several of these levels. And then when we zoom in, you can see the times down here, all right? This one was a little bit earlier, okay, before the 9:30 open, but this is gold, so this can start moving 8:30, 9, a little bit earlier. But you can see we have this micro dump and pump template going into the session, right? And if we are in this dump and pump template, once we're on the backside and we're making higher highs, we are looking for dump and pump scenarios in our session, which is exactly what we get here for an easy entry, okay? I took this trade, so did several other traders in the group, right? And in Sniper's Discord, once we broke that level, there's your entry. Boom, okay? Now, we're looking at something a little bit different on this slide, okay? We're looking for the same types of trades every time we come to the chart. We're looking for the same types of patterns, okay? It's either going to be a trap and shift, or it's going to be a pump, coil, dump, right? Or a dump, coil, and pump. So over here, this is the trap and shift type of pattern, all right? If we zoom in here, You can see we've been consolidating. We're just chopping sideways, and then boom, we pop the top, and then immediately shift and trap those traders. This is the trap and shift where we break out of that level and then immediately give the reversal pattern and sell off quickly, right? And then over here, this is our pump, coil, dump. So no matter what, we're looking for these types of patterns, all right? Even, regardless of the master pattern template, each one of these, okay, has the master pattern template that's there, but they look slightly different, right? This is the trap and shift. This is the pump, coil, and dump. So now we're zooming in on the pump, coil, and dump, and you can see we have our peak formation low, peak formation high, lower low on the inside, all right? And then we pump and dump, all right? Sometimes it will look like this, right? But if we zoom in even further, if we're just looking at this area here, okay, in the session window, you can see what time we're at. This is 7:30. This is 11:30. We have our peak formation low, peak formation high, lower low on the inside, and then we pump and dump coming off of that EMA. All right. And here we're looking at the 15-minute chart. I want you to look at how the EMA is interacting with it, especially here, right? We pump back up into that EMA. We're coiling sideways with that EMA and then dumping down below it, right? And pulling back into the EMA, right? That cross right there. Now, as far as your entries are concerned, because remember, this whole thing, this whole master pattern thing is about the structure of the market, all right? The direction of the market, and if you should be looking for pump and dump or dump and pump, right? But when it comes to actually entering, we're going to be using specific levels, right? We're paying attention to specific levels like monthly highs and lows, weekly highs and lows, daily highs and lows, the current day's high and low, and the most recent high and low. Price is always in a box. So when we say we're looking at the monthly high and low, that's the monthly box. If we're looking at a daily high and low, that's the daily box. All right. When we're looking at the most recent high and low, we're sometimes looking at session highs and lows. Okay. But we're looking at a box on the day. Okay. So you can see here, when it comes to entries, we have this low and this high, okay, going into our timing window, okay? That's our most recent clear high and low range. And you can see we pump up, we're working back into the high of that box. We take out the high right there at 11 a.m., okay? And then start to reverse after that, okay? So we come up here, trigger this level, and then reverse, harshly going in the other direction, okay? Now, here is the NASDAQ chart from today, Tuesday. I actually took this trade, okay? I sent this in the Discord, this exact image, right? So, and I'm showing this break and retest sort of thing. You have to remember that there's only two types of trades, trend trades and reversal trades. If we're looking for a reversal trade, we're looking to break the low, right? And then reverse and go higher. If it's going to be a trend trade, we're going to break that low, retest that level, and then continue going lower, all right? Which is exactly what we had happening here. We broke the previous day's low, right? And then multiple times we were retesting that, the whole support and resistance flipping idea, okay? So we broke down, pumped back up to that level, and then started going lower again. I took my entry as we broke lower, okay? As we broke the current day's low that was right here, right? We break that. That's my entry. We had this clear low, right? As a target. So that was where my target was. The entry as we broke that level. Target, stop loss was at the high of that candle there. And you're looking at a 5-minute chart here. So a 1 bar stop, that's a big candle, right? But it's as easy as that. Easy as that. All right. So that's it for this video. I hope that it makes sense. I know I went through it kind of fast, but I hope that it makes sense. I hope it helps you out a little bit when it comes to identifying these things on your charts. The key takeaways from this video, okay? I need you to remember everything that Stacy's ever taught you, okay? Stacy is the man. Stacy is the GOAT, okay? He's telling you everything that you need to know. All right. So you have to remember that timings, levels, behavior of price, prices in a box. Okay. Peak formations. Stacy's teaching you all of that. All right. The master pattern template is Stacy's entire strategy rolled into a single image. The master pattern is not telling you how to enter the market. It's a way that I have learned to identify market structure to help me figure out the directions of my trade and if I'm looking for a pump and dump or a dump and pump scenario in whatever session I'm trading. Okay. So it's about structure. But when it comes to your actual entries, you need to still be paying attention to the same things. All right, which are timings, levels, behavior of price, with the universal entry criteria of this 20 period moving average. All right. You see, I like to keep my charts clean. I'm not using 5 different EMAs or anything like that. I'm simply checking out the structure. I'm making sure that the master pattern is in effect. Okay. And then I already know there's only 2 types of trades, a break and retest or a trap and shift. It's that simple, right? So I appreciate y'all being here, man. Until next time, I hope you continue to free your mind.